Shingirai here again with another update on portfolio performance over the past week. As I'm sure most of you might have seen, news headlines have been relatively red, especially with regards to equity markets coming into a risk-off year with initially Omicron concerns were later dominated by concerns of rising interest rates environment, especially from the US Fed. That would see on a one-week basis all 10 of the CBAM portfolios underperforming their respective benchmarks, with returns relatively risk-off, with CBAM 1 returning minus 0.92%, down to the equity-heavy 5v2, down 3.97% on the week. In terms of detractors from performance, we continue to see weakness there from big tech clean energy, amidst concerns that an inflation environment would negatively impact the technology behind clean energy. We also see some weakness from Schroders European smaller companies and ASI European smaller companies, both down more than 6.2% on the week. We also saw some weakness in the US, and that's across all market cap sizes on a strongly risk-off week, where the Fed recently announced openness to hike interest rates in the March meeting in the press conference from yesterday. In terms of positive contributing to performance, Red Needle China, we've seen significant recovery there from Chinese equity up 2.75% on a one-week basis, and some good performance from Global Gold and iShares Physical Gold as investors fleeted to safety in a risk-off equity market. On a year-to-date basis, all 10 of the CBAM portfolios again underperform respective benchmarks, with returns strongly negative for the equity-heavy 5v2 down 6.62% on a year-to-date basis, and CBAM 1 down 2.25% on the same timescale. In terms of detractors from performance, again the story continues, where we see some weakness from big tech, clean energy down 16.99%, and we continue to see European stocks out of favor across ASI and Baillie Gifford, both down more than 15% on a year-to-date basis. We also see some weakness there from Japanese equities, general European equities, and US smaller cap equity performance on the back of concerns, obviously in Japan, of a slowdown in the recovery of the economy coming out of a post sort of COVID time span. In terms of positive contributors to performance, again, we see strong performance from Threadneedle China Opportunities up 1.78%, and also HSBC China up 0.72% as investors begin to see cheap valuations and also an accommodative stance from the People's Bank of China.